Evolution AB is offering heaven-like potential, and here is why. The company has seen a significant decline from their highs in 2021. This seems very odd if we consider that at the same time frame, almost every relevant metric improved. This can therefore be based on the following two scenarios. 1. The company was heavily overvalued in 2021 and has now returned to more reasonable and justified valuations. 2. The market is exaggerating to the downside, leading to a potential investment opportunity. In this video, we will analyze these scenarios to eventually conclude if the company could currently be an attractive investment. Business and growth prospects. The company is one of the leading B2B providers of live, real-time casino streams, which allow the players to directly interact with the dealer through the internet. They offer classic games like poker, blackjack, and roulette, but also specific game show formats like Monopoly Live and Crazy Time. The company is licensing the software and infrastructure to online gambling operators worldwide. Here they provide a full-service product that includes dealers, video streaming, and game development. Experts are currently expecting the online gambling market to grow at rates of 12% per year until 2030. This is a drastic decline from the historical growth rates of Evolution Gaming, justifying a lower premium. Risks to consider. In the online gambling segment, there are strict regulations. Any changes in licensing requirements, or maybe even complete bans, could therefore hinder Evolution's expansion or even destroy existing markets. Very intense regulations in the anti-money laundering, youth protection, or data privacy also pose a big risk for the company, as this generates the need for a costly compliance department. In the case of a prolonged economic downturn, consumers of the online casinos could cut down their spending, which would ultimately lead to lower revenue for the operators, which in turn also negatively impacts Evolution. Through the live stream and high quality, the company needs to provide 24/7, low-latency live stream to its customers. This can be very costly and prone to mistakes. The company is also battling with strikes and illegal actions taken by a union in Georgia, according to their Q3 2024 earnings call. This limited their output in the affected studio to only 60%. The CEO also mentioned that they are increasingly battling with cyber attacks in Asia. If these struggles continue or even worsen, this will obviously negatively impact the company, leading to higher costs and a decrease in margin. Overall, I, however, believe that all these risks seem manageable, and the management seems to have understood the importance of these issues. Valuation. Looking at the historical PE ratios of Evolution, 2021 seems to be an outlier, as the average lays at 36, while the stock was trading at rates higher than 75 in 2021. Like mentioned, this can, however, be mainly attributed to the fluctuating growth rates. The exaggeration in 2021 was mostly justified by high growth rates, leading to PEG ratios under 0.9. Currently, the company is trading at a ratio of 0.7, indicating potential upside. To evaluate the company individually and without only factoring in historical figures, I conducted two discounted cash flow analysis. One is calculating the required growth, which justifies the current valuation of $15.8 billion. The second DCF is anticipating the very realistic and achievable growth rate of 12% per year to then determine the potential upside. Required growth. Evolution needs to achieve growth rates of 6% for the next years to justify the current valuation. This seems very achievable considering the underlying market and historical growth rates. Anticipated growth. With assuming reasonable growth rates of 12% per year for the next 7 years, we get a fair value market cap of $21.4 billion, indicating that the company could currently be undervalued by up to 36%. Conclusion. Considering the juicy 3.8% dividend yield and the potential undervaluation of 36%, I rate the company a strong buy right now.